Welcome back, and in our business news, Dubai's airport free zone has been named as the world's top economic cluster, while Jumeirah Lake Towers came in at the 11th position globally out of 150. The results were from the Financial Times Foreign Direct Investment magazine, where factors including growth and expansion plans, the presence of high growth industries, transport services and infrastructure development, as well as economic potential were accounted for. A spokesperson for the magazine stated that the Dubai Airport Free Zone took the top spot in this year's rankings after being recognised for attracting foreign investment to the region, as well as strengthening its position as the fastest growing business hub in the Middle East. The Free Zone reported it had seen an increase of more than 100% in the number of new companies setting up in 2011 compared with the previous year. The UAE and Qatar missed out on an upgrade to emerging market status in December 2011, having been previously denied the upgrade back in 2009 and 2010. So both countries have been under review, and the index compiler MSCI said in a statement on its website earlier this year that the classification review is set to be this June. So to tell us a little bit more about this, we're now joined by Bruce Powers, the head of research at Trust Securities. Welcome to the show today.
Hi, Laura.
So what is the likelihood of a classification review this month, and what exactly has been happening these past 6 months?
Well, as you know, it's widely anticipated that any kind of upgrade would be very positive for the UAE markets because it can result in billions of dollars of extra liquidity from foreign fund managers. Now, whether it will happen remains to be seen. There's a lot of uncertainty because the changes that have happened over the last 6 months are a little clear on whether they're going to satisfy the MSCI. Now, the index provider is going to make an announcement on Wednesday, June 20th, about what their decision is. Now, the Securities and Commodities Authority, the regulators, have said that they've fulfilled all the requirements of the index provider, including concerns about foreign share ownership. So we'll have to see whether that's true or not. Now, they did make a very positive, I think, move this week and towards greater disclosure and transparency by requiring any investor that has 5% or more of a company's share to disclose it to the regulator. And not just them individually, but it also includes their children and spouse.
Now, some investors also voiced their concerns over the delivery versus payment system. Tell us a little bit more about that and what's been going on over these past 6 months as well.
Well, there seems to be still some concern from traders about the satisfaction of the system. This system was implemented about a year ago, and it allows for the payment and the delivery of a security on the same day that the transaction occurs. Now, international investors and MSCI have been concerned that a sale could occur in an owner's account without them being aware of it due to the implementation of this system. Now, they had a concern last time, as you mentioned, and one of the reasons was because of the low volume that occurred last year. The testing, they weren't really confident in the testing because of the low volume. So this year, the volume has improved quite a bit. A lot more time has gone by, so hopefully it meets their requirements this time around. But nobody really knows. There's still disagreement as to whether it's going to go through or not.
So thank you very much for speaking with us. See you next week.
Thank you, Laura.
And the Jebel Ali Free Zone has issued a $650 million to Cook, due in 2019. Its first transaction in the international debt capital market since 2007. The certificates pay a profit rate to investors of 7% per year, and the transaction saw strong demand from regional and international investors, with the order book 3.1 times subscribed. So let's now take a look at the stock markets across the GCC.